Let's welcome in our guests who are joining us this morning. We have Mayuresh Joshi of Angel Broking, Mr. T.S. Harihar and Sumit Pagaria of Choice Broking joining us now. Thank you so much for being with us, gentlemen. Mr. Harihar, good morning. Please tell us what are your top picks for the day.
Well, I have 3 picks and all 3 are on the buy side. The first, of course, is State Bank of India, where I have been positive for some time, and I think after the recent likelihood that the bad bank may happen sooner rather than later, we like State Bank at the current market price with a target of about 325 in 1 quarter. The second stock which is a very recent listing, which is DMart, better known as Avenue Supermarts in the market. Now we like the stock at the current price of about 625, 630. With an upside target of about 750 on the stock. Again, I am being conservative because I do believe that over a longer term this stock is a multi-bagger, but we do expect a 20% return on this stock over the next 1 quarter. The last stock is a stock which I have been positive on for quite some time. In fact, I had first recommended the stock at about 395, that is Havels, and the stock has moved up to about 471, which is close to our first target. We are now reiterating a second target of 600 on the stock, and we believe that Havels is going to be one of the big beneficiaries as far as the GST is concerned. So Havels is another buy. We have a 3 months target of 600 on Havels.
Okay, so 600 for Havels. Ms. Harihar, very bullish on this counter. Sumit, what are your top picks for the day?
Hi Anisha, good morning. Well, I have 3 stocks for the day. The first one is Cipla. Cipla is looking good to me. The stock has been consolidating quite a long in last couple of weeks. We have seen that the stock has been consolidating around 570, 590 levels. Now immediately looking at the chart, it seems that from here on we can see a good upside move in the counter, in which we can see levels of around 610 as an immediate target, and then overall we can see 622. So for a trading perspective, one can initiate long position in Cipla at CMP with the stop loss to be placed at around 588 levels on lower side for the upside target of 622 levels. The second pick for the day is from banking space, and that is PNB. PNB is looking good on charts, and it seems that after a long time it has given breakout. Now looking at the chart, it seems that on higher side we can see levels of around 165 as an immediate target, and overall targets 175 to 180 levels. Purely for a trading perspective, one can initiate long position in PNB at CMP with the stop loss to be placed at around 147 levels on lower side for the immediate upside till 165 levels. The third pick for the day is from cement space, and that is Ambuja Cement. We feel that from present levels we can see a move of around 20 to 30 points in next couple of days. So for a trading perspective, one can initiate long position in Ambuja Cement at CMP with the stop loss to be placed at around 225 levels on lower side for the immediate upside till 248 levels, and if 248 is taken away, then we can see extended move till 255 levels in next couple of days.
Right, Mayuresh, what are your top picks?
Morning, Pankaj. So I think looking at the general scenario and earnings expected to start getting reported for Q4, my own sense is that stocks which have largely underperformed are where earnings visibility and trajectory look extremely promising. I think those are the stocks and sectors that we're probably betting on. So auto ancillaries is something that we continue to like. Within auto ancillaries specifically, Amara Raja has underperformed Exide for the last 2 to 3 quarters. However, I think the revenue growth over the last 5 years has been exemplary for Amara Raja compared to Exide, growing at 21% compared to 6%. Considering its leadership position in the industrial battery segment, and considering that the entire saga of demonetization and remonetization is largely getting over and money supply is getting back into the system, my own sense is that the replacement market, along with expected recovery in volumes on the OEM side, both 4-wheelers and 2-wheelers, should hold the stock in good stead. So our own sense is that a 17-18% top line growth on a 2-year CAGR basis, margins close to 17-18 odd percent, and earnings trajectory will grow at 25 odd percent. So Amara Raja looks very, very attractive both from an earnings perspective as well as a valuation perspective at the current juncture. Within the abrasive space, I think, as I'm saying time and again, I think industrial consumables is one segment that I continue to like. So selectively, I think Grindwell, Norton and Carbon and Universal is where my belief is that the asset turns and the sweating of their assets should largely start coming through over the next 2 years. Balance sheets are reasonably very, very robust. Grindwell Norton has a debt equity of 0.01. It's almost debt free. Coromandel around 0.28. ROC for Coromandel is 17.5 times. ROE for Grindwell is around 16 times. Dividend yield is close to 1% for Grindwell. well. So I think you can't ask for more with capex being done, and only a minuscule part of the maintenance capex expected to come through. And within the cement space itself, I think JK Cement and JK Lakshmi Cement is something that I'll continue to like over the next 2 years. The kind of capacity additions that we've seen for the sector as a whole over the last 5 years has probably plagued the industry in 70-75% of utilization levels being reported. But largely going forward, as less capacity gets added and as the demand probably starts coming through, specifically from housing, from government focused areas like affordable housing and housing probably taking a front seat in terms of the government's agenda, along with infrastructure spending that the government is expected to do, the realizations will improve. The input costs have gone up. I think these companies, specifically JK Lakshmi Cement, have had a huge cost optimization, specifically on their power and fuel costs. And even on a valuation perspective, on an EBITDA to ton or an EV to ton perspective, I think these stocks are looking very, very attractive.
All right, so those are the picks coming in from Mayuresh. Now that the countdown for the rollout of the GST from July 1 has started, today we have the meeting of the GST Council taking place. It will finalize the draft rules today. The centre and state will finalize draft rules for various aspects in GST, and next everybody is going to be waiting for what the tax rates for different commodities will be.
Right, Anisha, what has happened yesterday is that Goldman has released a report on India. Right, in terms of some stocks that are getting added to the F&O space, a big list, 15 stocks gets added today. Some of them are new listings, some of them are stocks which are well traded but not a part of F&O so far. Equitas Holding, Capital First, Muthoot Finance, all these three stocks will be in focus. Some of them are new listings, especially Equitas has got a lot of interest after listing. Ujjivan Financial Services, another company that competes with Equitas, will also be added into F&O. Max Financial Services, after the entire restructuring process, and Indian Bank will be added to the F&O space. In terms of some other names, Interglobe Aviation, that's a new listing. It's 2 years old right now. PVR and Reliance Defense. PVR has done very well, and that's why it has got added into the F&O pack. These are the next three stocks. Dalmia Bharat, Infibeam Corporation and Suzlon are the next three ones. So Dalmia Bharat, of course, has done very well. Infibeam Corporation, a new listing. Suzlon was a part of F&O. It got removed a couple of years back, but now with the volumes and the price interest that is there, is now getting back into the F&O. I think it's up some 7% in the pre-open session right now. Piramal Enterprise, Escorts and Shree Cements are the other three names. So a total of 15 stocks get added into the F&O space.
There are a host of mid-cap stocks that are also in the news today. First is Bharat Financial. It has assigned a pool of receivables of 192.5 crore rupees to a PSU bank. Then we have Balasore Alloys. There is a committee meeting of the company today to decide on preferential issue of warrants. So fundraising for Balasore Alloys. For Saturn Credit Care, they have approved allotment of debentures worth 35 crore rupees. Mukund has entered a joint venture with Japan-based Sumitomo Group. This joint venture is for rolling and finishing of alloy steel. Again, we have Dilip Buildcon in the news. It has won orders worth 503 crore rupees by the NHAI in Andhra Pradesh in an EPC mode. And
right, there's a new listing also today. It happens at 10 a.m. today. So right now the pre-open session will continue for this listing. CL Educate listing. It's the first after DMart, so a lot of interest. But however, the subscription was not particularly that great. Issue price is 504. Issue size is about 70 lakh shares. That includes a fresh issue as well as the entire offer. The offer size total is about 238 crores. The total subscription was just 1.9 times. So as I told you, the interest was not as high as Avenue DMart, but it's the first listing after Avenue DMart. It's a company which operates into the education space. It's a company which offers test preparation services, mainly for MBA, mainly for banking and law. So these are the entrance tests that they prepare. They have 151 centers in 87 cities, and the revenue split is about 60% for the testing business and 40% for the enterprise solution business. In terms of numbers and what they are going to do with this money, so working capital requirements of 52 crores, debt repayment of 18 odd crores, and acquisitions of 20 crores. This is the fresh issue. Other part is the offer for sale that the company is doing. This is the numbers. So on a EPS basis of 18 rupees, at a higher band, it's at about 27 times on a trailing basis.
Sumit, very quickly, what's your Nifty strategy for the new series?
Well, Anisha, Nifty is looking strong. That day, yesterday we saw a very good closing in the Nifty, and now it seems that here on we will see levels of around 9250, 9300 is the immediate target in Nifty. I think for a trading perspective, if anyone wants to initiate a position in Nifty, then that should be on buy side. One can initiate long positions at CMP, or if there is a dip of around 20 to 30 points from present levels till 9130, 9120 levels in Nifty, then that can be used as a buying opportunity. And on downside, Nifty has support at around 9050 or major support at around 9000 levels. So till the time these levels are not taken away, any dip in Nifty from present levels should be used as buying opportunity for the immediate upside till 9250, 9300 levels.
Right. 30 seconds remaining for markets to open. There is a big report from Goldman Sachs, but we've got the expiry yesterday. Overall volumes may be high because it's the last day of financial year in terms of trading. So a lot of inter-promoter transfer if anybody has to do, a lot of adjustments if anybody has to do. It's probably the only day remaining. So maybe volumes are higher, but FNO action expected to be very limited today. Pre-open session, of course, is behind. 14 points down for the Nifty, broadly in line with what SGX is indicating. However, if you adjust on a like-to-like basis, it's probably indicating a slightly lower start than what was expected. We should start getting the prices anytime soon now. The first trades should be on your screen. There you go with the first trades. Nifty is down about 14 odd points. BHEL is down 45 by 1 rupee now. It's excluded from the Nifty pack today. Hero Motocorp 18 rupees down. HDFC Limited down about 1.8 rupees. Dr. Reddy's it's at about 2623 and Aurobindo Pharma is up close to 3 rupees. BPCL is up around 0.36. Grasim is absolutely flat. Asian Paints is flat with a negative bias. ACC is up about 0.25%. Eicher Motors 135 rupees down. That's Reliance for you, 2 to 3 rupees on the higher side, 34,000 shares traded. Idea Cellular is down about 0.6 rupees, but it's excluded from the FNO pack. ICICI Bank will be in focus today, 1 rupee down, 58,000 shares now, 80,000 shares traded. Remember, some of these names like ICICI, Axis have done particularly well. Also SBI has done pretty well in the last few days. IOC 378, it's a part of the Nifty from today, so 45,000 shares traded, flat with a positive bias for IOC. BHEL exits the Nifty pack, so that's I think it should be on the lower side. It's down not much, it's just about 35 paisa on the lower side. Indiabull Housing Finance, that's also a company which has been added into the FNO space. Let's see that. Okay, it's not reacting much, it's just about 5 rupees on the lower side. So that's precisely what is happening in these Nifty inclusion exclusions. Bharti Infratel is down 12 rupees, but that's because of the ex-dividend that it goes today. So 325, actually it's 12 rupees ex-dividend, so it's up around a rupee or so at this point of time. Ambuja Cement 234, 235, that's about 1 to 2 rupees on the higher side. They have their AGM today. Power Grid is a stocks in news, but really no change as far as Power Grid is concerned. Let's look at JSPL. I think that's where you would see a lot of interest. So that's up around 2.3, 2.4%. It was an important development as to what happens to their promoter funding. Godrej Property absolutely flat. Again, news flow that markets have not reacted much to. So that's broadly what is happening in the large cap space. Tata Motors is flat with a negative bias. Really no change, for some of these names. Anisha, anything that you can pick up on the volume side?
Well, Pankaj, Suzlon is seeing very large volumes. It is the biggest gainer, biggest in terms of volumes. 10 million shares already changing hands, and we've not been on 5 minutes of trading. But Suzlon is one that is seeing a lot of action today. Then there are a few chemical and fertilizer stocks that are buzzing today. Fertilizer and chemicals Travancore 6% higher, Rashtra Chemicals and Fertilizers 4% higher. And Gujarat Narmada Valley Fertilizers up 1.5%. Plus we have some of the rice stocks, the rice exporting stocks seeing a very good move today. LT Foods is up 4.5%. We have Kohinoor Foods up 3%. And some of these stocks are doing well. Even KRBL is trading with gains today and volumes are higher. There are reports that rice prices within India have moved up, and maybe on a pricing outlook we're seeing some of these stocks moving higher. On the losing end, Bharti Infratel is down about 3% and Punjab National Bank is down 1%. ICICI Bank is also facing some pressure, down 1/6%. What would you do with Adani Ports, Mr. Harihar? This stock has done well. Do you think now the outlook for some of port-based and trade-based companies is set to change? Do you think there could be a sustainable improvement in exports? For the last 3 months, India's exports have improved.
Well, I think it's not just about exports. What investors are probably betting on is that Adani, with its Kandla port interest, should see a substantial improvement in business as trades gradually picks up over the next few months. See, over the last few months, the exports have been weak, largely because global trade has been weak. I think all that could change in the next probably 3 to 6 months. So I think that is the big bet, that if once the goods throughput at Kandla starts picking up, then Adani port could be a very major beneficiary. So I think what we have seen probably could be the tip of the iceberg, and there could be a lot more steam left in the stock even from these levels.
All right, so very positive on Adani ports. Mayuresh, we're getting into earnings season. How would you approach HCL Tech, which has had a good run amongst the IT heavyweights? Any preferences or top picks?
No, largely again, I think it has performed reasonably better than most of its peers, and the kind of guidance that the management has given seems very encouraging in an environment which is full of headwinds at this point of time. So with the currency pressures that we'll probably see, the EBIT margins are going to face cross-currency headwinds specifically for Q4. And Q4 typically, Anisha, is also a time when the discretionary budgeting exercises are determined by the end user client. So I think if there is any deferment or delay in those fronts, you're probably going to get delay in terms of order wins coming through. Third, I think the entire transformation in terms of going on cloud, digital, I think that is going to take some amount of investments and some sheen away in terms of the actual applicability and the kind of utilization levels that we've seen. Though I think HCL Tech has reported better numbers and has better control over attrition, what really happens with the border tax is a large unknown for a lot of export-oriented sectors, which includes IT. So largely, I think the guidance given by the management in terms of the dollar revenue growth and even in terms of the cross-currency expectations put forth are very encouraging at this point of time. Management very, very hopeful of maintaining their EBIT margin performance, and with the kind of order wins that they do, my own sense is that the stock can perform over the longer period of time. But again, I think all these headwinds is something that HCL Tech and the other IT companies might have to brace with, specifically in terms of Q4 and the next few weeks in terms of the global macro headwinds that actually can come through for IT companies. So again, I think declines is something that I'll look at, but again, I think I'll be looking at the top tier as a pack. HCL Tech obviously gets included in that, but I think wait for better entry points is what I say. I think wait for the numbers to come out and then probably take a call on the stock.
Harir, what do you do with names like Suzlon, which have been re-added into F&O? A lot of volumes, a lot of interest over there. Do you think that can re-rate again because of higher liquidity?
I don't think so, because most of the problems of Suzlon, like a very high level of debt, very, very sluggish growth and earnings, I think all of them continue to be a problem as far as Suzlon is concerned. What has probably changed sentimentally is that someone of the stature of Mr. Sanghvi has taken a stake in Suzlon. So I think there is a certain amount of, minor re-rating on the stock. I think the interest that we are seeing today in terms of volumes is largely because of Suzlon's inclusion into the F&O space. And I remember, as an F&O arbitrage trader, Suzlon used to be a preferred stock because for a small price stock, it used to have a 5 paisa tick, which means arbitragers used to love that stock a lot. So I think obviously there's a lot of arbitrage positions being built up in Suzlon, but fundamentally I'm not sure whether much has changed as far as Suzlon is concerned.
What happens with names like Ujjivan, Equitas? They have been added into F&O. You think that will create a lot of interest in the microfinance space, because till now it's only limited to Bharat Finance?
Yeah, that obviously would, but again, I've always believed that addition or deletion from F&O really doesn't make a vast difference over the longer term. See, shorter term, there is some amount of rebalancing that happens, especially for people, let us say, who have an open exposure in F&O but haven't used up the limits. I think so there will be some amount of temporary interest, but I don't think that over the medium term much is going to change because of the addition to the F&O list.
Right. What will be your call on Equitas, Ujjivan? You have recommended some of these names earlier. You continue to be bullish?
Oh yes, I like both these names, Equitas and Ujjivan, and I think temporarily what has happened in the last few days is because of the demonetization there was some delays in collection. I know there have been some minor downgrades that have happened in case of companies like Satin Credit Care, Janalakshmi Financials. Now that has kind of I would say tempered the expectations around these MFI stocks, but I think it's temporary. Next 2-3 months I think all these collections should start getting back on track, and I think Equitas and Ujjivan both are looking to be very, very promising at these prices.
Right. Mayuresh, what will be your call on REC, PFC? These are two names which have done very well in the last 1 year or maybe 6 months.
The momentum is continuing, but let's understand one fact. Because of the UDA implementation and the repayments thereof, the loan advancement growth has been very muted for both these companies, and repayments are still expected to come through. A few key states like Telangana, Madhya Pradesh, Tamil Nadu are expected to repay around 12 to 15,000 odd crores. So I think the kind of incremental advances growth that one expects might remain extremely soft and tepid, at least for a quarter or two. Secondly, I think if you look at the core dynamics itself, I think the restructured book specifically for REC has come down significantly. The UP Genco getting upgraded in the last quarter, so it currently stands at 19,500, and private sector probably is one of the biggest contributors at around 10,200. The overall, I think it forms around 16% of its overall advances. Similarly for PFC, I think if you look at the GNPAs, it's come around 3.07% compared to 3.21 on a quarter-on-quarter basis, and the restructured book there stands at 29,400 itself. So again, I think if the projects do not get commissioned or a lot of these private players actually go bust, you might actually have some write-offs and extra provisioning that might be required to be done. So whether the stressed out portfolio, including the restructured portfolio, probably has the strength, probably the balance sheet does have the strength to bear with GNPAs in excess of 4.5% for PFC, around 5.5% for REC, even if you probably assume provisioning coverage extending much beyond what is required in expectations of a lot of these projects going bust, and again credit costs remaining high. I think the cash flows are there existing in the system because a lot of transitional financing is probably taking place at this point of time. So I think the momentum probably is continuing for these guys. The spreads probably getting maintained quite reasonably, and even though the cost of funds is coming down drastically, the incremental lending rates are coming down as well. However, I think if you offset all these effects together, I think dividend yield is still getting maintained at 4.5%, which is a very encouraging sign for investors. So my own sense is that the implementation, the repayments thereof might take sheen off in terms of the lending portfolio and the growth thereof. But largely, I think if one really has a long-term view of 15 to 18 months, and if somebody is holding on to the stocks at lower levels, one should continue holding these stocks.
Right. JSPL has seen some promoter funding. Of course, they had told that they will do preferential allotment to promoters. 5% dilution, but promoters have invested money. Mayuresh, do you think in a steel upcycle or where people are feeling the left out feeling in metals, this would be taken positively?
So again, don't individually track that counter closely, Pankaj. But again, I think what my commodities team has been telling me that aluminium is something that will still remain in deficit for the better part of FY17. And I was just reading a few reports in terms of the packaging industry in India as well. Well, aluminium probably is a very minuscule portion at this point of time, though it is one of the most commonly used packaging materials across the globe. So as that type of content starts increasing in India, and as the applications probably become more diversified in India, my own sense is that aluminium making companies probably can have a big advantage. So I think Hindalco is something that I've been liking specifically. I think the stock has outperformed significantly in the past 1 year. And yes, you have been seeing headwinds probably in the beverages business, specifically in the Eurozone. But again, I think the management is very, very focused in terms of their auto line commissioning, and autos expected to form 25% of Novelis' top line. Secondly, if you look at their free cash flow expectations, I think the management is very, very clear of throwing out $350 million in terms of free cash from operations, and the capex requirements itself is around 250. Third, I think even in terms of their Indian operations itself, I think the smelting operations are running at full capacity. So I think the Aditya smelting ops, the Utkal one, I think are running at full optimized capacity requirements, and that probably augurs well for the stock because it ensures full fixed cost absorption, and with the kind of captive mines that have got allocated specifically on the coal side, I think you're probably going to see more synergies getting built in, specifically with the cost differences probably coming through in terms of coal pricing not probably existing on the balance sheet. So I think aluminium business as a whole, as an industry, is something that I continue to like, and within that, my own sense is that on a staggered way, Hindalco is probably one stock that I probably prefer within the metal space.
Right. Sumit, what will be your call on JSPL? It's done pretty well. How do you think it can perform going ahead?
Pankaj is still looking strong on charts. I think immediately looking at the chart, it seems that in next couple of weeks or in next 2 to 3 months time horizon, we will see a very good upside move in the counter. Now presently it's quoting at around 123, 123.05 levels. From here on we are expecting a move of around 15 to 20 points. That means on higher side immediately the stock is headed for 140 levels, and above that we are even expecting JSPL to touch levels of around 170, 180 in longer term time horizon. We feel that metal stocks are looking good, and in next couple of months we will see a good upside rally in most of the metal stocks. As far as JSPL is concerned, yes, one should initiate long position in JSPL at CMP, or if there is a dip of around 5 to 6 points from present levels, then that can be a good buying opportunity. On downside, till that time 110 levels are not taken away, any dip from present level should be used as buying opportunity for an immediate target till 140 levels, and above that we can see extended rally till 170, 180 levels in next couple of months.
Mayuresh, do you have a view on any of these food processing / rice exporting stocks? We're seeing LT Foods up 6%, REI Agro is up 5%, KRBL has moved higher, Kohinoor Foods is up 4%. What are you picking up? Are the prospects for any of these companies looking better? Is there any price move? There are reports that rice prices are higher. How important will the monsoon be for these companies?
No, again, Anisha, I think commoditized business, very difficult to decipher how the cycles will move for these sectors as a whole, very difficult to probably decipher how the pricing environment for these sectors move. And again, I think the classical argument on how demand supply will probably pan out. There have been certain reports that have been reported of Iran probably having basmati exports, but basmati again counts a very minuscule part of a lot of rice producing stocks. So I think how much contribution that actually has in terms of bottom line is something to be deciphered for. But largely again, I think when expectations run high that pricing might move up, I think the stock prices react accordingly. So I think no specific coverage or no specific view. But again, I think if there is some trading momentum on these stocks, I think the trading momentum can very well continue based on the news flow that these stocks receive.
Mr. Iyer, some of the fertilizer stocks are buzzing today. Rashtra Chemicals and Fertilizers up 5%. There is a belief that there could be an overhaul of the urea fertilizer policy. Are you picking up anything like this? Because urea is a politically sensitive topic, and of course the government has a pilot project where the fertilizer subsidy will be done by the method of the DBT. Do you think things for fertilizer industry is looking like it will change? Is it poised to change?
See, it may not happen that soon because we have seen historically that fertilizer being a politically sensitive subject, governments tend to tread quite cautiously on that. Having said that, what has changed the sentiment pertaining to fertilizers is that the very emphatic performance of the ruling NDA government in states like UP and Uttarakhand has probably brought back the belief that the government may not shy away from, I would say, slightly harder reforms. So I think the urea area is actually one of the part of the harder reforms that the government is expected to push through. Also, I think there is expected to be a turnaround in demand because despite the El Nino which is expected this year, the Kharif output is expected to at least be at par with last year. So that is, I think, again going to be good as far as fertilizer demand is concerned. So putting all these things together, I would believe that there is definitely some kind of a re-rating that is happening with fertilizers. And I won't be surprised if the government decides to bite the bullet and go ahead with some kind of serious reforms on the fertilizer front.
All right. Thank you, gentlemen, for joining us on NDTV Profit today, giving us your top picks. Please leave us with your disclosures. Mr. Harihar, any disclosures that you may want to leave us with?
See, of the stocks I mentioned, Demand is one stock where I'm personally exposed to. The other ones, you can assume that we have talked to our clients at different points of time.
Mayuresh, your disclosures?
Anisha, the stocks that we've discussed, no personal holdings in that, but it is possible we've discussed all these stocks with our clients and we may be holding these stocks on behalf of our clients in our funds.
Sumit, your disclosures?
Yes, absolutely, Anisha. These stocks, few stocks we have discussed, and especially the trading calls which you have given on NDTV Profit, the same view we have shared with our clients also. So it's better to assume that our clients might have positions. Thank you very much.
Thanks for being with us, gentlemen.
On that note, we are taking a break. Coming back in 2 minutes, Mihir Vora will join us on the other side.